the good place to start is just talking about Nvidia, and I think your take on how, what you thought of the quarter, and how it came in relative to your expectations and put them up.
Yeah, look, Tom, I mean, I think that it was probably the most anticipated earnings that we've seen, I don't know, in a decade or ever, right? And in terms of watch parties and everything else for Nvidia, just take out the noise in terms of numbers and in terms of what happens. Blackwell delays put to rest. Think about all the agita over the last few months on that. And that's similar to what we're seeing in our checks throughout Asia. Demand, we've demands outstripping supply 12, 15 to 1. And nothing we saw from numbers or metrics makes me think that that's dissipating. Now, look, in terms of like whisper numbers for the quarter, 33 billion, 33 and a half. They got 32 and a half, slightly below whisper. Stock gets hit. We look, 2 billion beats, we believe are probably likely here, right? But they're not. There's no reason that Jensen and the team are going to guide to anything near that, especially in a Blackwell type quarter. And I think you walk away, the demand thesis is accelerating. Yields are improving. And ultimately, I think it sets up for actually the next leg of the story. Now, look, I get where like sell-up happens, investors be like, oh, is this it? Is this over? It's second inning in a 9-inning game in terms of overall AI, because it goes back, and this is the most important. If there's anything anyone takes away from this call, it's for every dollar spent on an Nvidia chip, the multiplier for the rest of tech is $8 to $10.
In the high-stakes world of the stock market, one name has consistently captured the spotlight: Nvidia. Recently, Nvidia's stock has surged dramatically, with a gain of over 185%. This meteoric rise is attributed to its dominance in the artificial intelligence sector, specifically in producing the groundbreaking graphics processing units, or GPUs. Yet, the intrigue doesn't end there. As December 3rd approaches, the anticipation around Nvidia's next big presentation is palpable. Investors in tech giants like Oracle, Tesla, Microsoft, and Amazon are keeping their eyes peeled for what might unfold next. So, the burning question remains: should you seize the opportunity and invest before this crucial date? Let's dive deeper into Nvidia's journey and uncover what the future might hold for this tech giant. Welcome back, everyone, to Investocracy.
Well, I mean, Nvidia is still at the center of the entire transformation that's coming with AI, and Nvidia continues to be one of the leading companies. So, from a long-term investor perspective, I think anyone should look at Nvidia's congestion and consolidation as opportunities to add if they don't have exposure. And then I think for anyone else, it's just a time to be patient, because of course stocks don't just go straight up.
There are a couple stocks, however, moving higher. Nvidia is up about 3%. Yes, almost 3%. The company hosting a 3-day summit in Washington starting today. It's up 25% over the past month. That move has pushed its market cap back up above $3 trillion and passed Microsoft into second place behind just Apple.
Nvidia's journey in the AI landscape is nothing short of legendary. With its GPUs enjoying an 80% market share in the AI field, the company stands as a pillar of innovation and efficiency. These GPUs are more than just about speed and processing capabilities. They're the heart of every AI-driven endeavor. The ability to multitask with massive datasets in real time is what sets Nvidia apart. In an amusing twist, tech magnates like Larry Ellison and Elon Musk have been eager, some say downright desperate, for Nvidia's latest Blackwell GPUs. They've perhaps even resorted to a bit of begging, a testament to the insatiable demand for these technological marvels. A key theme running through Nvidia's remarkable sales figures and future prospects is the imminent launch of the Blackwell architecture. Expected to drive substantial revenue boosts, these chips promise a transformative leap in AI performance. A single Blackwell GPU can offer a staggering 30-fold increase in AI inference speed over the existing H100 systems, paired with significant energy efficiency improvements. Microsoft has already emerged as a major customer, and Nvidia's production forecasts indicate a future brimming with demand and potential. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
News of the day this morning, we're buyers of stocks on Friday, but even stronger if the jobs report is soft. The implication being you're buying no matter what. So it wasn't soft, it was hotter than expected. But nonetheless, why did you come into today thinking you were buying stocks regardless?
Well, there's a couple reasons, Scott. The first is that I think markets are much more focused on inflation reports and CPIs next week and the June FOMC meeting on Wednesday. And the second, which of course we think is going to just show a continued improvement in inflation. But the second is that stocks really historically have done well in the week following the release of the employment report, rising roughly 70% of the time. And it implies roughly 70 to 80 points in the S&P. Of course, it would be better if it was a soft jobs report, and it wasn't.
Well, it's funny you say that. It would be better if it was a soft jobs report, because I think the market spent a good amount of today deciding, what it was. Was it good news is good news is bad news? I mean, if the market doesn't necessarily need rate cuts, why is a softer report better? Why can't we just be happy with good news? Labor market's strong, economy's hanging in, don't need rate cuts, and still may get them later this year.
I generally agree with you, Scott, but as you know, there's a faction of both market participants and the FOMC that view some of this data as too hot for them to be comfortable with. And I think, the more positive data points you get, the more you might actually start to see markets price in a hike. And so I think you're right. There is a Goldilocks window, but it's safer to say bad news is good news because those actually clearly take away inflationary pressures.
Despite some skepticism about the sustainability of AI spending, Nvidia CEO Jensen Huang has confidently touted a staggering demand. Analysts project billions in sales driven by orders from mega-cap companies. Nvidia's ambitious journey to modernize $1 trillion in data centers signals a steadfast future in AI innovation. While Wall Street remains watchful, it seems Nvidia's upward trajectory is far from over. Much like a comic alarming about the futility of timing the market, let's just say if your stockbroker is promising rainbows and unicorns, it might be worth investigating their reality check agenda. Nvidia investors can take solace in tangible growth forecasts. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make. So if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I'm wondering if you think in any way that, thinking that June is going to be the point of the year in which we start to get this money off the sidelines and into the market, and how Goldman Sachs framed it the other day, talking about a, quote, wall of money coming in, but not really until July, that you could have some selling between now and then, but that the beginning of the third quarter and thus the second half of the year is the area to really plan for a wall of money coming into this market and then pushing stocks that next leg higher.
Scott, that dynamic is certainly at play for a couple of reasons. One, April was a down month, and I think a lot of institutional investors actually sat out May thinking April was the start of a bigger correction, so June is when money starts coming back in. But I think more importantly, since the end of 2022, I think a lot of institutions and a lot of high net worth individuals sort of sat out this market saying, hey, I'm happy earning 5%. By the middle of this year, if the S&P is up 15%, on top of missing 30% last year, I think a lot of folks are going to say, listen, I can't just sit on cash and earn 5% anymore when I'm missing out potentially on a 25% year for the S&P.
Tom, what'd you make of the fact a couple times this week we had rates go down and stocks go down? Not exactly the dynamic that many had been expecting, right? Because that's not the way that stocks and rates have been reacting, right? They've been pretty well correlated. Rates down, stocks up. Well, there were a couple of occasions this week where that didn't work. Why?
It's kind of hard to tell, especially day to day, but if I had to guess, we don't want to be in a situation where the economy is slowing so much that we've actually hit stall speed, so rates would go down. That type of economic dynamic would scare stocks. So it's almost like bad news is too much bad news. In fact, maybe that's why today's jobs report kind of fits right in the middle, because it's actually good enough to tell us the economy is still strong, as you said, but it's not enough to actually add to inflationary pressures.
Tom, what if, you know, this market is just screaming out, it's Nvidia's world and we're just living in it, right? I mean, if Nvidia's up, markets are good. Nvidia's not doing much, S&P can't do that much, Nasdaq's negative today. It's a one stock story.
I mean, Nvidia is really a generational story for now because, I mean, how many $3 trillion companies actually have doubled, you know, I mean, so clearly NVIDIA is important, but it's important because it's really one of the most important ways to get exposure to AI. And I think the AI story is, you know, early innings, as many people talk about. It's transformational in terms of productivity, and there's a lot of use cases developing. So as much as it might feel like a one stock market, as you know, there's a lot of stocks up more than 20% year to date. And I actually think breadth is likely to increase. So for investors, there's a lot of opportunities in the second half.
So, is NVIDIA a worthy investment as the December 3rd conference looms? The case is strong. Current figures and future forecasts suggest a sustained period of growth, bolstered by the massive potential of AI and NVIDIA's pivotal role in it. As tech titans continue to pour billions into AI infrastructure, the necessity and profitability of NVIDIA's innovations will likely drive stock prices upward. While some concerns persist about the overextension in tech investments, NVIDIA's unique position as both a leader and innovator in AI provides a compelling reason to invest. As you ponder NVIDIA's place in your investment portfolio, consider the broader market movements and technological advances that burnish its appeal. The stock's present momentum and strategic roadmap offer a tantalizing opportunity for those seeking to invest wisely in the stock market's thrilling narrative. What's your take on NVIDIA's dazzling journey? Is it a yes or a missed chance in your eyes? The conversation starts now, and it's one filled with the promise of AI-led transformation. And finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen.